on when chaos threatens, key tips for owners and operators for avoiding disasters in survey and enforcement and navigating the process with lenders and other funders. I'm the first name Howard Sollins. I lead the what we call the Long-Term Care Center of Excellence. We're a 700-plus lawyer firm with about 90 attorneys who are in different practice groups, all of whom have a heavy focus on long-term care. Two of those lawyers are here with me, Elizabeth Sauer and Mary O'Kelly. And then we're really grateful to have Luann Gutierrez from Greystone and Ed Williams from Berkadia. They'll more substantively be introduced. I'm part of what we like to brand as the Baker Oprah Health Group and have been practicing law for about 40 years and nearly all of that in long-term care. And this is, I think, an important program for not only people who are in the room, but people who are not in the room. Because I'm looking around the room, and I know a lot of people, and I know a lot of people who are consultants. Here was the focus and the idea. People who are growing businesses, who have a heavy focus on the metrics, on the numbers, on the financing, on the acquisition, on the deal strategy, want to assume that they can defer operations to people they hire and trust, which is generally the case, but they don't mind the store. And then people like me and other people in the room get calls about the deep into a survey cycle, or somebody shows up with a subpoena, or worse yet, a search warrant, or something like this. And there's things you can do to manage that. I don't know how many people watch the TV show Fauda. I thought about calling it Fauda, right? Anyway, so I'm going to speak for a few minutes, and then we're going to this will be two parts. I want to talk about things to think about in advance, things to think about when a bad thing happens and the government's not there yet, and what to do when the government comes in. It is not a hyper-technical, we're going to teach you about denials of payment for new admissions and what they mean and how to bill during them. This is, the goal here is for you to understand this process and for people to have these slides at the ready so that they can sit in a governing board meeting and say, are we doing these things? And then you get the call that a bad thing has happened. Are we doing these things? And then they say the surveyors have showed up, and they can say, are we doing these things? Have we done these things? That's the goal, okay? So here we go. Preparation is key. Well, that's a novel thought. Think through the corporate structure, governance, and how this is exercised. I know people, the days of parent-child subsidiary, nice, neat pyramid structures don't exist anymore. But be thoughtful about it. There are a lot of people who put things in place and don't periodically go back and look and say, who are the entities? Is it trusts? Is it individuals? Is it corporations? Are they in good standing? Am I doing the proper governance? Know each facility's pre-acquisition history. We get this all the time. Wait a minute, this happened under the prior owner. When you accept assignment of the Medicare provider agreement, which you typically do, you're not required to, but CMS puts you through hell if you don't. You're dating everybody they used to date, right? So and understand that, because what happens is the surveyors, especially during that vulnerable period just after acquisition, when they come in and they're serving you for a prior period. And you say, but we had a due diligence checklist. We had disclosure schedules. Well, what did you find out once you got in there? Due diligence does not stop at closing on the sale. What should you know after takeover? Find what earlier surveys did not. Tell the truth to yourself about your internal team. Their former staff is your staff now. Not just saying, well, I know my people. They'll take care of it over time. It is what it is. We'll just work it out. It's not just going to work out. Know your external supports. I guess that's a mini commercial. Funders, mini commercial for these folks. Insurance resources, legal and clinical. If I need resources and something happens, do I know who I'm going to call, or am I going to waste critical hours and days trying to find the right team? Empower the staff to do the comprehensive self-assessment, okay? This self-assessment is not only legally required, but it's common sense And you can't be in denial about it. Effective corporate compliance plan, I'm sure you've been to 100 speeches about that. If you don't know what I'm talking about, see me after class. Implement an effective quality assurance process, taking into account an effective plan towards confidentiality. We're going to talk a little bit about that. HIPAA and state law. Office of Civil Rights is on the march on things like failure to give timely copies of medical records to people who request them. OCO, we've seen multiple enforcement actions on that and others. So pay attention to HIPAA, and remember, it's not only privacy but security. People tend to gravitate to the areas in which they feel they're strongest. And so if you're a liberal arts grad, you may like privacy. If you're an engineering grad, you may like security, but you got to know both. Equal Justice Act, which if you don't, are getting another key issue having to do with reporting. And also don't forget the Deficit Reduction Act. If you bill Medicaid more than $5 million in a year and there's a certain definition, there are things you need to have in place, for example, having to do with signage, having to do with your employee manual, having a governing body that's trained, knowing who's on your governing body. And that may or may not be your board of directors. You may or not have. Life safety code standards. We're seeing more and more and more surveys having to do with survey enforcement. And do you know what FSCS is? I didn't know until about 2-3 years ago. Fire Safety Evaluation System. If you have an older building with different parts, the old house with the 70s edition, with the later constructed project, then you're going to need to know how the CMS is going to survey you because they're less and less tolerant. Complete, timely, and accurate PBJ. We've seen people get one-star rankings because their prior owner did not give them the data they needed for a complete, accurate, and timely PBJ filing. Is there an OIG corporate integrity agreement? I know Tamar's here. She's and I've had many a conversation about this subject. And are you buying a facility? We work with many people who are going into something that might be on the CIA, is on the CIA. How do you get off the CIA? Special focus, we know about that candidate. The abuse cautionary icon, the hand, the thing that CMS calls, you know what? I just told these friends that my back sometimes gets a little tired. I'm going to keep going. The abuse cautionary icon. CMS denies it's a stop sign because it's not an octagon, but it is. We just had a resident-to-resident abuse situation, unanticipated G-level deficiency because the state thinks the facility should have prevented it, and now they're at risk for a red icon, not for anything their staff did, but for what 2 residents did with each other. So know what that is. What is your title, authority, and role? We talked about that from governance. How is support and oversight provided? Where are records kept, and how do you communicate by telephone, email, text, and social media? I get this all the time. Somebody sends me an email. The email keeps changing. Sometimes it's a Gmail, sometimes it's a Yahoo mail, sometimes it's from this business, sometimes it's from a side business. Just remember, if your emails become subject to discovery and your lawyer says we now have to do an evaluation of all your email accounts, if you're using your personal accounts for business, you may not want to be using your personal accounts for business. So know how you're communicating and how you are communicating with each other. Some people are afflicted with a disease I call diarrhea of the fingers. They just can't stop texting about it. Understand the different types of confidentiality. Again, it's important for you to understand quality assurance, attorney-client privilege, work product. You don't have to become an attorney, but you do need to know what these differences are so that when something bad happens and you're communicating, you at least can know enough to ask the question, is this covered by quality assurance privilege? Is this covered by attorney-client privilege? What do I need to be able to do that? And you need to think about that in advance so that you have an action plan at the ready. What do you need guidance on what to do if a law enforcement investigator or subpoena arrives? They don't make appointments, right? They show up at your house at 7 o'clock in the morning in front of your kids on a Sunday morning and say, do you mind if I come in for coffee? What are you going to do? You know, I had a client who called me at 4 o'clock in the afternoon and said, boy, did I have a busy day today. Too late. Bad things happened. Sometimes bad things happen to good people. So at least know in advance who are you going to call if something happens. Credibility. This is a theme across all of what we're going to talk about. Why is credibility essential? Because it's all about credibility. Why should regulators, residents, families, and staff trust you? Why should they trust you? They go home. I'm an ex-regulator. People go home at night. They go home and they see their families, and they say, did I do right today? They walked out and they left your staff in control of a building full of infirm, elderly, disabled individuals. They got to trust you. They have to trust you. And so how do you earn it? By what you not just what you say, but what you do. And what do you do if you don't have credibility? And you admit you don't have to quit. Sometimes you have to buy it. Sometimes you have to rent it. Sometimes by bringing in an effective team and showing your commitment and resources. But you can't just throw up your hands. Culture of compliance, that's something the government talks about all the time. Ask yourself the question, if something bad happens, will your staff know that it happened? Will your staff tell you about it? What's your culture? Will people tell you about it? Who's on the response team? How are you going to learn about it? Now, all right, so you're planning in advance. You've done all the things you're supposed to do. Now the bad thing happens, and you got to report it to the government. Think in advance for something called past noncompliance. Because past noncompliance is an official CMS term. I'll get your attention in a heartbeat. If you get an immediate jeopardy citation with no actual harm, and they find that you self-identified it, self-corrected it, abated it, and are in substantial compliance before they come in, that IJ will get you 20 cut points. But you got to earn it. You got to think about it in advance. You don't need a plan of correction. And so this is a quote from, this is what the government calls substantial or past noncompliance. You weren't in compliance after the last date of the standard survey. You've self-identified, corrected it, and you've demonstrated that it's not going to happen again. Know your reporting obligations. Again, this is not a speech to tell you about all those things, but know that you have them and that you honor them. How is the res conducting the investigation? How are you protecting the resident while the investigation is happening? These are questions for owners. What do we do to make sure that people feel safe and that they're protected? Who's doing the investigation? Are we just handing out blank sheets of paper to high school graduates and saying, write down what happened? Well, there wasn't enough staff, and, so who gets the report? Is it going to be something that's an internal document, or is it something that gets turned over to the document? What are the tools? What are the risks? Asking yourself the question when something bad happens, will this likely potentially be an IJ? And what are you going to do to address the event? How wide is the issue? Prepare in advance. We call it in the office, act today with 20/20 hindsight, so that we'll be ready for past noncompliance and be able to make an assertion for removal or abatement of the IJ as happened prior to the survey. You got there first. If your health inspection is within 7 days of the life safety code, you may be on 180-day track. You got to know your timing. If an IJ is surveyor, have you looked at the tool? There's a specific tool they're supposed to be using. Ask your staff, did we get the tool? What does the tool say? And who's preparing the removal plan or the abatement plan? What's the difference between a removal plan and a plan of correction? A removal plan abates the IJ, but still you're not in substantial compliance. Substantial compliance means you fixed it so the survey cycle is over. Who is dealing with the government? So you don't have different people conflicting, bumping each other. Who's talking to the CMS regional office? Should you be talking to the CMS regional office? and understanding the distinction, because even if you're not in substantial compliance and your past non-compliance efforts fail, you may be able to get removals with a reduction of the IJ, of the removal plan. Read the cover letter, date stamp your correspondence. I get that all the time. When did you get it? I got it today. You know, people need to understand that, because those are, know the clock, know the 180-day clock, don't fear the IDR process, know the difference between independent informal dispute resolution and independent dispute resolution. Don't get hung up with the state on back and forth with rejections of your plan of correction. They're eating into your key 180 days. You need to ask your staff the question, was the plan, don't just ask them, when did you submit the plan of correction? Was it accepted? How do you know? What is the date it was accepted? Ask those questions. Those are owner questions. Track your 90th day. You probably know what the 90th day is. Again, we can talk about it afterwards. And so what are you doing for managing information? Know the difference between per instance and per diem CMPs and when you should be advocating for one versus another. Ending the survey cycle. How do you know when the bleeding stops? How do you know when the pain is over, right? So is desk review without revisit needed? Some states require many more revisits than other states. Don't just assume that the survey cycle is going to be applied in the new state you're going into in the way that you're used to, depending on where you come from. Know the difference between the 180th day and the 15-day notice period if you're up against a denial of payment or a termination, and who's in contact, who makes the contact. Closing thoughts, credibility is key. Do you have it? Will you admit yourself when you don't? How are you going to get it? Preparation is key. Self-examination is essential, including inherited compliance to staff. This dovetails with comments on some of the earlier panels. Tell the truth to yourself. Clear tracking of information to facilitate effective responses. Know about IJs and the difference between abatement and substantial compliance. You get there first. You don't manage the clock. Don't forget that short-term reaction is no substitute for long-term perspective. The last thing I'll say is that I often give speeches or I'm in conversations with people who have a very fatalistic attitude about CMS. The thing that is my biggest pet peeve is long-term care is the only part of the healthcare delivery system where we let the government set the standard of care. If you want to know whether a hospital is doing a good job, is it accredited? If you want to ask whether a doctor is committing malpractice, you go to the state medical society. If you ask somebody whether the nursing home's doing a good job, they'll talk about their 5-star ranking, they'll talk about what the surveyors had to say. We abdicate responsibility. You set the tone high enough and let the government catch up. Because at the end of the day, just as there are people who they're seen as evil, the government likes to say, why can't you be like them? Your goal is to be the them. Okay.
Thanks, Howard. So we wanted to have some continuity between Howard's regulatory overview and talk to the lenders about how they view these issues and how you establish the credibility that Howard talked about when you're working with your lenders so that you get them to work with you rather than against you if you have a bad regulatory issue rise. Before we really get into that, I'd like to get Ed and Luann to give a little bit of overview about your background and Berkadia and Greystone's platforms. Ed, could you give us a little bit?
Sure. As Howard mentioned, my name is Ed Williams. I'm with Berkadia Commercial Mortgage in our seniors housing and healthcare group. I focus on financing, skilled nursing, assisted living, independent living, memory care, all through HUD, Fannie Mae, Freddie Mac, and our internal proprietary bridge loan program. I've been in this industry for about 20 years and been with Berkadia for 4 years.
Hi, I'm Luann Gutierrez. Ooh, that's loud. And I'm with Greystone. Like Ed, I specialize just in healthcare and seniors. I've been at Greystone 13 years. I've been in the industry 21. I was formerly with GMAC. And the particular team that I'm on, we only do the bridge to HUD or bridge to Fannie or Freddie. We do have a whole nother side to Greystone that does our permanent takeout, but we are just a complement to them. And our group has been around since 2004 with Greystone, the bridge platform. I guess that's about it.
Great. So today we thought we would talk about credibility. Howard describes so many things that can go wrong and the immediate and long-term reactions and plan one need, but our thought is there is a silver lining if these things occur. So today we want to talk about how do you earn your lenders or maybe your capital partners' trust and goodwill in the wake of an incident, or perhaps you discover something that's troublesome. So we consider there to be 4 pillars to earn and establish that credibility. There's communication, transparency, preparedness, and execution. So communication. How quickly do you notify your lender or your capital partner? There's a right answer. We'll go to the ones that I think each of you may internally think, yep, I've done that instead. So do you call them when the incident occurs or when you become aware of it? That's the right answer. That's good. Excuse me. They do, and that's actually my second point. And this is the one that I bet many of you may be doing instead, which is after you've read your loan documents, or that lease, or maybe that JV agreement, and you and your attorney have determined you have X business days to report it. Another option is you wait and see. You think you can resolve it, there's no reason to get everybody worried. Oops, this is escalating, now maybe I should tell them. And then finally there's the, I'm not saying anything, it's gonna go away on its own, or if they find out later it was de minimis, it'll be okay. The goal is as early as you can so that you can be partners together and work through it.
So the next pillar that we kind of focused on was transparency. How much information do you give your lender? How are you sharing your risk analysis? Are you, giving them a realistic estimation of how long you think that a DP&A might last or what the likely amount of a CMP might be? The third pillar we looked at was preparedness. Do you have a team in place to respond, like Howard talked about? How quickly can you respond? Do you know the right people to call? Do you have a plan to address the issue that has arisen? How are you interfacing with the residents and patients, their families, and your staff? And as well as, your capital partners and the state regulators.
And then finally, there's execution. Do you follow through on your plan to resolve the issue? What steps are you taking afterwards to mitigate the risk of it happening again?
So let's explore these with our lender partners here. Luann, how do you guys at Greystone handle an incident from an organizational standpoint, like internally at Greystone? Do you have a different team that looks at regulatory issues versus financial covenant misses and that sort of thing? And how do you guys sort of address and react to those?
So typically, a lot of our clients will reach out and speak to their originator, and then they'll bring us in, our team in. And if it's financial in nature, obviously my underwriting team will look at it, we'll analyze it, we'll try to gather all the data we can to help us to make an informed decision and kind of work with you as a partner. If it is clinical in nature, I have to say I'm blessed. That our company actually has an operating healthcare business. So I have some experts that I can go to and I can ask them, here's the situation, here's what we've been told that occurred, this is how my borrower is planning to handle the situation, what do you think? And so I'm able to get live feedback from people in the field that actually do this every day. And so that gives me extra comfort that I'm actually being able to be a good partner with my borrower. And that's the whole goal. I want to partner with you. It's not me against you. I want to partner with you and kind of let's resolve this together. Because at the end of the day, I don't want to take the loan back, and I want you to succeed. That speaks well for us, is when our borrowers succeed.
Absolutely. Ed, do you guys have any different way of addressing it? And also, can you talk about if it's a different analysis if the loan is on Berkadia's books versus if it's with one of the agencies?
Sure. I would say our process is largely the same, depending on whether it's a pre-closing or sort of a post-closing matter. If it's post-closing, it'll usually sort of start with our asset management team. But I think in all cases, our relationship banker is involved sort of along the way. And we're just trying to figure out what the problem is. If it's a clinical incident that's more severe in nature, we may go to an outside consultant just for liability reasons or more acute expertise to sort of help us navigate through that process.
Luann, would you treat an incident differently if it were to occur pre-closing versus
Yeah,
after?
so definitely, when it's prior to closing, we're going to be proactive, and when it's post-closing, it's going to be reactive. And so we'll definitely, if we have not closed the loan and it occurs while we're in the underwriting process, be prepared for a lot of questions and a lot of drilling down, because we want to fully explore and know everything we need to know about the situation, because there is a possibility it could hinder us from closing. And then also, if it's an acquisition, it might be to your benefit to know all these facts, eyes wide open to see, is this something you really want to buy into as well? So I would say it's definitely either proactive or reactive.
And I know we talked a little bit before this, that sometimes at that point, there's a little less focus. Can you talk a little bit about the challenge when it's discovered after closing and sort of that communication component? Because more likely than not, folks are on to the next deal and maybe doing diligence on there.
Right, as Luann mentioned, post-closing, you tend to be a little more reactive. Whereas if you catch the issue on the front end, again, you have everyone's attention and everyone's probably more focused on trying to solve the issue, because it may be a closing event or a refinance or a loan maturity that may be coming up that may prevent that deal from getting refinanced.
Are there certain type of regulatory incidents you consider more worrisome than others?
I would say, just generally speaking, because we're a HUD lender and we're a bridge to HUD lender, I would say that any issues that impact HUD eligibility are sort of are real concerns for us, whether it's a special focus or a candidate for a special focus list. I would say those are sort of top of the list sort of problems that we want to be paying real good attention to.
What about staffing?
Staffing, yes, but again, there's usually kind of a workable plan, and from state to state, you really have to sort of understand what's causing staffing ratios to be out of whack. It could be, just the impact on a survey on that particular day in that particular state. So I personally am less concerned about staffing versus kind of a more impactful issue, such as not being able to get to HUD.
Howard, a question for you. You mentioned that red icon, and I know that's something for everyone to be concerned about as well. Do you mind telling us a little bit more about it? Make sure everybody knows how to look for it.
Well, you can find it because it's on your nursing home compare. And this is a new policy. It's getting a lot of attention. CMS has gotten a lot of pushback and negative comment, and they're, from all reports, are digging their heels in on using it. Basically, for certain abuse and neglect F tags, if you have, if memory serves, it's a G-level deficiency or above in certain F tags on your standard survey, or if you have two lower level deficiencies in abuse and neglect that meet a certain standard, you end up with what they think is a cautionary icon, because it's just a hand that goes like this. It's more of a karate chop than a stop hand. But I think what's happening is people are anxious. First of all, the consumers have to understand what this is and what it's not. I think as you see it more and more, people will get accustomed to it and know that it's just cautionary. I think one of the great things about this conference is that you can identify funders and lenders who understand what 5-star is, understand what the red icon is and what it's not, and what it means. So, but know in advance, this is a classic example. You know you have an abuse situation. What are you doing in advance so that you can perhaps avoid the citation and the conversation, but be prepared to have the conversation?
Luann, in that sense, Howard mentioned star ratings. How much emphasis do you place on them when you're doing your diligence?
Yeah, so we do look at those very carefully. And especially because since we are a bridge lender to specific takeouts, and HUD is our takeout source, they have really increased the way they look at that, especially a 1-star. You really have to have a very good story and a very good explanation. We're even seeing some scrutiny looking at a 2-star. So because of that, and because that is our ultimate takeout, and our loans are only for 2 years, I have to make sure that if I'm taking on a property that is a 1 or 2-star, we really drill down and look at that. So, I don't want our borrowers to be annoyed or irritated with us when we start asking them a lot of questions, but it's because I need to thoroughly understand why it is at a 1-star rating. Is it because your staffing's not where it needs to be, or is it because there was some care issues that they noticed when they were on site? There's a variety of reasons that do affect that, but we personally do take a lot of credibility, and we really do look at that a lot for ours.
Yeah, and I think we would also, I would agree there, I think we would be looking at the operator's entire portfolio as well. So for example, is this a systemic problem across their portfolio? Is it just in a certain state? I think the more, kind of a deep dive we can do and learn more about what's causing the problem, I think the better off we all are. And quite frankly, we find that a lot of operators learn a little bit about their portfolio with us doing our own deep dive.
Well, and Howard makes a good point that if you have lenders that really know the industry and understand the industry, you're likely to have a different reaction than if you're with more of a local bank or a less experienced lender that might not have the background to understand these issues. And I know we all have war stories. Luann and Ed, can you give us any examples of what you've seen operators do right and well to be able to respond to these and work with the lender?
Yeah, we actually had a situation a couple of years ago where the operator filed bankruptcy, but the PropCo was our relationship, and they immediately, right off the bat, when they realized there was a situation going on with their operator, they contacted us. They gave full disclosure. They said our operator, their AR lender, has notified them that they're freezing their working capital line. So they let us know the timeline that they had been given. And then we proceeded, after about a month or two, we started having weekly calls with them. And they would tell us everything that they learned. The operator ultimately filed bankruptcy. Our PropCo came to us. They told us right off the bat, they're doing this. And so we had a working dialogue over several months, and it made the situation a lot better for both us, because we were well informed and kept apprised of everything that was going on. But then by the same token, I think it made the PropCo feel more comfortable because they knew we were walking alongside of them and not trying to step in and take over.
Right, and we've had a similar sort of scenario in recent memory where the operator, one of the principals, was indicted for Medicare fraud, and so the owner, the PropCo, was all over the issue and was in constant communication with us, to the point where we had to go and sit down with the higher ups at HUD to sort of talk them through how they're working through the problem, making sure that they continue to make debt service, and basically outlining a plan to remove that operator and replace it with a different one.
Well, in contrast, I have several in my mind that we've run into that did not go quite so smoothly. Can you give some examples of bad ways to handle it?
I have had that too. An experience where, it was an out-of-state operator. They went into a new state. They thought they had thoroughly done their homework, but evidently they hadn't. And somehow or another, they got off on the wrong foot with the state officials. And so every time, they had been in the building, I think it was about 8 months, and all of a sudden they were put on special focus. And they were caught by surprise, and obviously so were we. And it just appears, for whatever reason, this particular operator group just got sideways with that particular state. And so every time they would come in and do a survey, they would just nail them on several things. And so anyway, the originator tried to work with them and said, you know what, I recommend you work with this consulting group. They can come in, they can help you, they can probably recommend some things for you. They were like, no, we're fine. And so then we also, the lending, I talked to our operations folks and I said, what could you recommend that they should do? So they gave me some ideas. We relayed that to the borrower. They were like, yeah, no, we've tried that. That doesn't work. And so they kept, pushing us off and not wanting to work with us. And then they stopped communicating with us and they stopped sending financial statements. And so let's just say it started a snowball effect. And it did not have a happy ending, let's just say. But I mean, that was a situation that could have been completely different. And we were trying very hard to work with them, but it was just not something they were receptive to.
I'm going to knock on some wood here because while we've had sort of challenges with, certain properties and operators, and maybe it's taken a little longer than we had hoped to get to a place of resolution. We haven't had any incidents in recent memory that kind of resulted in losses to us or the department. Not saying that, they don't happen, but again.
As Luann mentioned consultants, how much do you see them get brought in at some point if needed?
I think we make recommendations that operators use them on a regular basis. I mean, there are instances where HUD will require a third-party risk management review, particularly in instances where there are one-star buildings. There may be systemic problems with harm tags, or if you're acquiring a portfolio that has survey issues. So HUD loves that. So I think that we kind of push it whenever it makes sense.
Makes sense. So before we end today, does anyone in the audience have questions?
We're all property lenders, right? So we don't do AR line. We have found that the real problem is not with the permanent lender or the lenders that you are representing.
Sure,
The real problem that we have is with the AR lender, particularly if there is a payment ban or an eviction ban. Do you have any thoughts about dealing with that issue when the problem that's going to get your attention is when there isn't any money to pay you, and that's when the AR lender stops lending?
Want to take it?
Well, I think that on most deals where there are AR lines in place, I mean, usually we have, obviously they're, from a legal standpoint, there are intercreditors and so forth in place, but generally speaking, if there's an AR lender in place, they're a part of that communication chain as well. It's not just us as a lender. We view the AR lender as a partner in that regard.
But
I understand that you have an interest credit agreement. That's not the point. And the point is, are you a source of operating capital when the AR lender has stopped lending? And you need to make payroll that Friday?
No, we're not.
I I can honestly say Greystone a couple of times because we knew the facility was still a viable entity. We have stepped in and did, I guess you would call it a protective advance, where we've helped do payroll, because that's a big issue. And
Well,
yeah.
Well, and it's a fair point too, as you're planning on the front end. So I represent a fair number of clients who do both term loans and the AR lines. And obviously, as you all know, credit stacks are getting more complicated with mezz and other things. So I think that is something on the front end to really think about, of who are all of my lenders? Do they know each other? How well do they work? And it's not a fair, it is a fair question to ask on the front end of how would some of that work? Because you're right, it can be very challenging if cash is trapped and now suddenly you have a much larger problem. You suddenly wish that collateral flip's going to happen quickly to turn the spigot back on.
And I will say, from Greystone's perspective, that's why we put so much effort into working on that intercreditor agreement with that working capital lender, because no one ever goes into the situation or the relationship thinking it's going to go bad. But I've got these ladies to make me realize you got to think what happens in worst case scenario. So I want another partner on that other side that's going to be willing to work with me and not shut everything down, because it does have that snowball effect, and it does affect me.
Well, and you're right that, that does typically lead to a really bad ending if there's no notice to the term lender. And so I would say, if you do get that scenario where you're going into default on the AR line, to go ahead and let your lender know, your term lender know, because that enables them to sort of respond and not be, sideswiped by an AR lender just ending everything.
Don't forget as well that some states have regulations or policies about being notified when facilities are in financial extremis, because sometimes the first time they'll hear about a problem in the facility is when the staff start calling the state for anonymous complaints saying, I had to pick up toilet paper on the way home, on the way into the facility or things like that. You think I'm kidding. That's, the kinds of calls they sometimes get. Now, sometimes it's just the run up to the union negotiation, but, but the state people are pretty savvy about that. But I do think that, if it's part of your whole anticipate, what are we going to do if this happens plan, because there's no substitute for thinking about this in advance.
And I'd say to that too, for the borrowers, tenants, don't be afraid if your future landlord or future term loan lender is asking questions about cash flow. And almost be a little bit nervous if you're closing a deal and you never got asked for a cash flow chart, because that probably is the indicator that folks aren't thinking on the front end of what could happen on the back. Whereas if they're diving in, it's not just because HUD says they have to, it's because they get the economics and the operations and are more likely to be able to deal with the situation if that happens. So, any other questions?
I think Elizabeth and I, when I first did the merger, we worked on a very sensitive matter in which there was a dysfunctional operation situation, and there was a REIT that had gotten into a situation, and the REIT actually, I had to take the REIT into the state, which is pretty unusual, because what I found was, on the one hand, one day I'm having a conversation with the REIT, and they say, I'm just a real estate entity. I don't have any role. I'm not legally required to have any role in operation. And then the next day they'd say, wait a minute, we own everything, and you're just the tenant. And I'll tell you, this is a true story. I'm sitting in that meeting, and the REIT person, and it was a bad situation, and the REIT says to a very senior government official in a particular state, we're just a real estate entity. And the government official's head like snapped on a swivel and looked at this guy and said, do you own that building? And he said, well, we own the real estate. He says, do you own that building full of people? He said, yes, we do. He says, then you understand what's going on here. So I'll let Elizabeth speak.
And that's right. So I represent REITs and lenders. So sometimes I'm borrower's counsel, sometimes I'm lender's counsel. But that's where I'd argue this becomes even more important, because that REIT may have public disclosures that are going to be a nightmare for them if something has escalated to an event of default. So you're right, it can be complicated. Everybody's interests may be somewhat aligned, but coming from a different perspective. But I really do think if you've partnered on the front end with folks that you know, feel comfortable with on all ends, you can come to that common goal. And there's going to be some pivoting of who to tell first and where do you try to fix something first. But ultimately, that landlord wants to work with you. And that's why really we've said other capital partners here, they have just as much of an incentive to help work through it. And as Howard ultimately said, you know, they're going to be in it with you. So, any other questions?
You were talking about one of your pillars was communication, and kind of like the 3 stages of communication. You know, unfortunately, it's a very high risk industry. There are things happening in the buildings all the time. If you took an approach of, you know, reporting every obviously statement, you know, practice to the bank, the lender. I mean, a lot of you know, you guys don't understand that industry or not industry. Greystone does, but it's. I mean, it would just be a constant flow of information, and I don't think that that's. You know, I don't think that would be. You want to know about those rabbit things that could escalate. You know, to a GRI day, because that's a constant. You know, battle that we fight every day.
So, you know, it's interesting that you said that, because I think you caught something that we had a bit of a blind spot when we were thinking through it, and we didn't touch upon materiality. And so I think that, you know, in our minds, we're talking the surveyor has come in, leaving with an IJ.
Yeah.
Not necessarily a prescription is wrong, it could be this, this, and this. That one I can't say, you know. We, as Howard mentioned, we have 50 nursing home defense attorneys, so I'm mindful how quickly things can escalate, but I think that's the part you as the operator have to use a little bit of discretion on of, is it an incident or is it facts that could lead to it?
So sometimes we talk a lot about the credibility issue. It's sometimes you're making a credibility deposit in the credibility account. So for example, the thing happens that you think could turn into something legitimately, and you just know, so that the lender knows these are people who are in contact with us. It's not just radio silence or people who forget to send in their 2567s. So it's the same thing. When you make periodic overpayments back to the government, the really bad one hits, they're more likely to give you the benefit of the doubt because there's a track record of self-examination and self-discussion. If it's radio silence until the truly bad thing happens, you got a lot of explaining to do, you know.
But I think you're right that if you're working with a lender like a Greystone or a Berkadia that knows the industry, then, you know, disclosing those little things is not going to cause them to panic. But if you're working with someone that doesn't know the industry, that's when I would kind of think about the materiality standard a little bit more, and just, you know, if they're not really comfortable with the regulatory environment, then it might cause a bit more of an overreaction than you'd get from a Greystone or a Berkadia.
Ed, what do you think? Are we speaking correctly?
Yeah,
or?
no, I would agree. I mean, I don't need to hear every little state survey issue that comes across your desk. Obviously, if over the weekend, you know, there was, you know, somebody falls and, you know, dies or something like that because of, you know, something a caregiver did. I mean, that's probably a more meaningful thing worth knowing, but just typical state survey tags, no, I don't think we need to.
And there's disclosures and there's disclosures. This is this quality assurance and attorney-client privilege. You know, you may make a decision that you're going to disclose the event of something, but I think they'll understand if there is, there's somebody is found through their head through the bed rails and they're dead, right? I mean, that's a public fact. Now, who was on shift and what happened in doing the investigation, there may be attorney-client, but at least they'll know that you identified it, you're dealing with it, you're addressing it. I don't think it's a question of including them in your turnaround part as your in that kind of granular detail, but it is deciding who the appropriate and who are the communicators, so that you don't have different owners and different operators all making different calls without a unified message point.
And I would also say, too, it depends on the situation. Usually we just want to know about IJs or something of that nature. But if you're on a special focus and you have to have those 2 consecutive surveys, once you have that first survey, we actually do want to be in dialogue with you after that one, because we want to make sure that you don't have a lot of deficiencies. So then when that second survey is happening and you're hoping to get that second consecutive one, you might tell us a little more about that one than you normally would, just simply because of the situation.
Right, it's just situation. I mean, I'll give you an example. We had a building that was a 1-star. Again, we got a risk management plan. And again, as we were getting ready to submit an application to HUD, they had an incident, again, that resulted in an IJ. Again, if you put your HUD application fee, you send your money in, don't tell us, your application gets submitted to HUD, HUD doesn't approve that deal, you put your money at risk. So it's, again, there are certain events that are worth telling us and keeping us abreast, but then there's others that are less important, if that makes sense.
Any other questions?
Well, thank you all very much.
Yeah.
Thank you all.
Thank you.
All right, thank you.